Hey guys, today I'm going to go into the differences between the cash system of accounting and the accrual system of accounting. So if you're a bookkeeper and you've had questions about this, hopefully this video will clear up some of those questions. And if you want my 10-second answer to which one you should use, I would say that accrual is more officially recommended. I personally keep it simple by using the cash basis, and it is easy to switch back and forth between the two with QuickBooks Online, so you don't necessarily have to choose one and go with it forever. So I'm going to talk about what they each are, when you might use them, and then I do have a screen record at the end that shows you how to switch back and forth. Alright, so starting out with the accrual system. In this system, you record everything in QuickBooks, so income and expenses, when it is billed, not necessarily when the money is actually received and shows up in your bank account. So in our everyday lives, we don't see this as much anymore because we're constantly using like debit cards and money is quickly taken out of the bank account. But I'm sure there are some instances where you get a bill and you wait a little time to pay it. Maybe it's your water bill. Maybe you don't have it on direct bill pay from your bank and it comes in the mail and they sent it out January 1st. You know, it sits in your drawer for a couple weeks and then you pay it by the end of the month. So there's a gap between when the company sent it out and when you actually pay it. So now that you understand kind of that gap that can happen in everyday life, let's think about your bookkeeping business, okay? So maybe you're running a bookkeeping business and you have like 5 or so clients and you send them an invoice every month through QuickBooks on like the 10th of the month. Usually on that invoice, it has like a due date. Or like sometimes it's called like net 10, which is 10 days to pay, or net 30. So you and your bank account are not going to be receiving the money immediately the day that you sent it, right? All right, so here is a breakdown of exactly what's going to happen. All right, so you invoiced your client in January. So they receive their bill that's like, I owe Morgan's bookkeeping business $250. And if I'm using an accrual system, then my business gets credit for that $250 now in January. So say the client has a month to pay their invoice, they pay the bill in February, and that is when the $250 shows up in your bank account. You have already recorded that income went in January, so nothing really needs to be done because you've already like taken credit for that income. And yes, depending on your system, you may need to mark it paid on the invoice. But if you're looking at your profit and loss statement, that $250 is going to show up in your January income because that's when you billed it and you're using accrual. So you can kind of see that the accrual method of accounting gives a more clear picture. It tells what bills and what invoices are outstanding, and it gives a more complete picture of that. Whereas if we're using the cash system, you'd be like, at the end of January, you'd be like, dang it, I feel like I don't have that much income. What's going on? Even though I've already done the work for this stuff. In the cash system, it doesn't show the clarity of that money that is gonna come in the future or gonna be taken away in the future. That example was of income coming into your business, but it's the same concept if you are paying bills. So maybe you get a cell phone bill and you have 3 months to pay it. In the accrual system, you want to enter it in QuickBooks when it's billed, not when the cash is actually taken out of your bank account. So maybe you have 3 months to pay your cell phone bill. So you can kind of see this is giving you a picture into the future, like, oh, in 3 months, I'm gonna have this expense. So I need to make sure that my cash flow looks good. I have this income that I'm expecting. I have these expenses that I'm expecting in the future. So I'm able to make sure I can pay all my bills and I'm making a good income. And I haven't mentioned yet, my name is Morgan. My website is FinePoints.biz. I have a masterclass and checklist you can check out. And a thumbs up really does help me out a lot, helps get engagement on my video. And if you want more bookkeeper videos, subscribe to my channel. All right, and alternatively, the cash-based system of accounting, you've probably figured out, is just the opposite of that. So instead of recording stuff when it is billed, you record it the minute it gets taken out of the bank account. So the amount of cash that your bank account says it has is the amount that is also shown in QuickBooks. So you record income when it is received, when it hits your bank, and you record expenses when they're paid. So that cell phone bill where you're talking about, you wouldn't record it at the beginning, you would record it 3 months later when you actually paid it. Same with furniture. Sometimes there's like a delay where you can pay for furniture later. If you bought like a new desk in January, but you didn't have to pay it for 6 months, you would record that payment when it actually came out of your bank account. So you're not really taking into account any accounts payable or accounts receivable. So let's look at what happens to that same example that we talked about earlier if your bookkeeping business is invoicing one of their clients. So now with the cash system, you email your client that invoice in January, same thing. The client pays their bills in February again. If you're using the cash system, then you would record the payment in February because that's when you actually realized the money, when it actually came into your account. So then if you look on your profit and loss statement, that income is going to show up in February. Accrual, it showed up in January. Okay, I don't know if I'm repeating myself too much, but I just want to make sure it's clear. All right, so next, which type of business uses each of these two systems? Starting off with accrual, big businesses definitely use the accrual system. So I believe it's like if you make over 25 million each year, then the rules of the generally accepted accounting principles say that you need to do the accrual system of accounting. I have a video all about GAAP. The thumbnail looks like this. It's just like kind of a set of rules that the accounting community agrees on to make sure everyone's kind of like on the same page. That being said, smaller businesses can definitely use that. And I kind of see it as a case-by-case basis, depending on the type of spending and the type of income they're doing. So like I mentioned, it does give you technically a more accurate picture of what's going on. You can see into the future about, what's going to happen in the next 3 to 6 months. The main con that I see to the accrual system is just it's a little more complicated. There's a few more moving parts and things you kind of have to keep track of. All right, and then conversely, the pros of the cash system is it seems a little more simple. Like it's easier to track income expenses just as they come in through the bank feeds, right? And I tend to work with smaller clients that make usually like less than $1 million. And so usually the cash system is working fine, especially if they're not like really strapped for cash, if they have a bit of a savings. And in some cases, it doesn't really make like a huge difference. Because like I said, a lot of payments nowadays are pretty real time. I will say one thing that's nice with the accrual method is like if your client is writing a lot of paper checks, sometimes, maybe you write like $5,000 worth of checks. You want to make sure you have that $5,000 sitting in your account so that the checks won't bounce, obviously. So that is an example where there can be like a delay in when you write the check versus when someone cashes it. I know that the bookkeeper launch course that I took, I have a video about it right here, and I have a link in the description about that course if you're interested, but I know they recommend using accrual. They see it as the more accurate accounting principle. Definitely check with your client if they have a preference. Oftentimes they might not even know or care what that means. So now I'm gonna hop over to my QuickBooks computer screen and let you know how to switch from cash to accrual or back again in QuickBooks if you would like to. All right, there's just two quick things I want to show you here in my sample company today. The first thing is when you have a report, it is very easy to quickly change from cash to accrual. So you can see these two buttons right here. You can just switch it back and forth. And if you do have income or expenses that show up as accrual, if they haven't made it to the bank yet, you'll be able to see those when you switch to accrual. And then if you totally want to switch all of your books so it's automatically set to a different one, you just go to the gear icon and then accounts and settings. And then if you go down to advanced, you can see that in this accounting section, the accounting method right now is set to accrual. So you can just hit this little thing and you can change it to cash and then save it. And then your reports will automatically pull as cash now. Thank you guys for watching. Leave me any comments in the description box and click right here for another video you can watch next. Talk to you later.